You know that feeling when you finally decide to buy something and the price instantly drops? Like someone invisible pressed a button the exact moment you hit buy? Now imagine that happening not just with your phone or sneakers. Imagine it happening to your entire investment portfolio. You bought Bitcoin at $104,000 in November 2024. You believed in it. You saw institutions coming in. You watched BlackRock launch its ETFs. And now you're staring at the price stuck in a tight range, wondering, what did I miss? Why isn't it at $150,000 or even $200,000 yet?
Historical context. Debt is a tool of control. Let's start with a story that seems distant but explains everything. In 1982, Mexico borrowed billions of dollars from international banks to build infrastructure and create a brighter future. But there was a catch. The debt was denominated in US dollars, not Mexican pesos. Mexico couldn't print dollars. Then, the Federal Reserve sharply raised interest rates and debt payments exploded. The country was trapped. The IMF stepped in with a rescue package that, in reality, forced Mexico to sell state companies and open its markets to foreign investors at bargain prices. They sold pieces of their country just to repay the banks.
The mechanics of the debt spiral. This is called a debt spiral. And today, a similar mechanism may be unfolding against the largest Bitcoin holder in the world, MicroStrategy. On paper, they're a software company. In reality, they're a massive, leveraged Bitcoin fund. They hold tens of billions of dollars in Bitcoin, but they must service convertible bonds and preferred shares. They need around $700 million a year just to cover debt payments, nearly $2 million every single day. Their core business doesn't generate that much cash. The whole strategy relies on a flywheel. As long as their stock trades at a premium to the Bitcoin they hold, they can issue new shares and buy more Bitcoin. But what if the stock starts trading at a discount? Then they can't raise cheap capital anymore, and their cash reserves could run out in less than 2 years. At that point, they may have to do what they promised they would never do: sell Bitcoin to pay the bills. And if a player that large starts selling, the price drops further, forcing even more selling. That's the death spiral.
The institutional goal? Discounted Bitcoin. Now ask yourself, why would major banks want to push MicroStrategy toward that cliff? Imagine you're an investment bank. Your clients, pension funds, want Bitcoin, but they can't buy at $100,000 because of volatility. But what if they could buy it at a 20% discount? If MicroStrategy gets into trouble, there could be a block trade. A bank buys Bitcoin at $75,000 and resells it to elite clients at a markup. To make that happen, pressure must be created. They short the stock, publish risk reports, and build an atmosphere of inevitable collapse. It's financial warfare without a single crime.
Psychology: retail investors versus professionals. Professional investors view price drops very differently from retail traders. When the crowd panics and sees losses, professionals ask, why is this happening? Have the asset's fundamentals actually changed? If they believe the price is being artificially suppressed through financial engineering, they do the opposite of the crowd. They buy more. That's how great wealth transfers happen. Remember the gold market in the 1990s? The Bank of England sold half of Britain's gold at $275 per ounce. It was called Brown's Bottom. Gold was dismissed as a barbarous relic. Over the next 20 years, gold rose to nearly $2,000. Some say it was a mistake. Others believe banks simply wanted to buy gold cheap. Conclusions and survival strategy. If you own Bitcoin, the worst thing you can do is panic during moments of artificial pressure. Banks want your asset, and they want it cheap. If you believe in the long-term thesis of a scarce digital asset in a world where governments print trillions, short-term manipulation shouldn't change your strategy. Slow, patient investing has built more wealth than crypto hype ever did. And part of that patience is understanding that the system has built-in advantages you must learn to use. Don't let yourself get shaken out just because someone else understands the rules better than you. Know what you own and don't let emotions destroy what you've been building for years.